Good morning from Chicago traders. It's 8 a.m. Chicago time on Tuesday, the 24th of August, 2021. This is episode number 2058. Thanks for joining me today. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. As many of you know, I spent the entire afternoon yesterday moving offices with the Edge Clear team. My workspace is from within that office, and we actually did not finish. We ran into some delays moving into the Board of Trade building, and we ended up leaving there. I think I got home at 10:30, and I still didn't unpack my workstation. So here I am from home. I lied yesterday saying that I'm going to be squawking at you from the Chicago Board of Trade, but that's not true. Hopefully we'll finish that up today. We can get back to business. So here's where we are right now. The overnight risk posture is mixed. We have the Russell holding gains slightly, up 5.3 points or 0.24%. with the S&P up just 4 points, and the S&P has been in somewhat of a downtrend since about 11 o'clock, since the pop to new all-time highs in the Globex session. It reversed that, it made what's called a tweezer top, and has been pushing the overnight low almost back to settlement. Settlement in the S&P is 44.7550. So the S&P, although up, has already tested the high and has pulled back. The Eurozone is seeing a bit of a draw. The German GDP growth rate year on year came in fairly strong, 9.4% versus 9.2. Q on Q for Q2 is 1.6% versus 1.5%. Pretty strong numbers out of Germany there. But still, those stocks are not able to sustain a bid. Crude continues to climb. Crude, of course, pulled back quite strong. I don't remember what the crude high was in the equivalent October contract. I don't have a chart in front of me. But crude definitely took a big drop and has been rallying back up. Crude up 1.23% and is the leader on our board here. The 10-year notes, 30-year bonds are off slightly, and so it's mixed to neutral so far. Copper holding steady at 425.7, and Bitcoin is under 50,000 again, with Ether holding above 3,300. So that's where we stand. Pre-market, we had a bunch of releases, the key of which were Best Buy, Medtronic, and BMO Harris, Bank of Montreal. And after the close, we have several retailers: Home Builder, Urban Outfitters, Toll Brothers, Nordstrom, and Intuit. What's on the market's mind? COVID continues to be an issue, of course. Pfizer got its vaccine officially approved by the FDA. So that's likely to trigger off a few things. And then we still have a standoff on U.S. infrastructure. And this morning, Goldman Sachs said it's raising its taper probability to 45% from 25%. That's relatively significant. They're expecting the Fed to taper sooner. So that's where that is. The calendar today holds, we had Redbook. We're looking for new home sales month on month at 10 o'clock Eastern, about a half hour after the open, along with the Richmond Fed and the New York Treasury tips purchases. At 10:30, we have a couple of auctions and then API crude stocks. API crude stocks after the close today at 4:30. The condition of the S&P currently is this number is incorrect. It should be 123,000 contracts, or 133,000 contracts have traded, which is in line with what we've seen for most of the summer. We've had 12 points of range. The overnight inventory is at 92% positive, 92% positive. And the point of control is at 44.83, just slightly above. We'll look at that in a second. So that's where that is. Now let's take a look at what was expected yesterday versus what we got. What we're seeing here is yesterday's Trader Bite expectations segment. And what we're looking for yesterday is a market that is likely to squeeze into 60, consolidate, and then push through to 44.70. And I mentioned yesterday, large offer at 44.80. That offer had been there for a couple days and is likely to trade out. We did push into it. We had a nice collision at 44.80, and we consolidated at that level for quite some time before pushing higher into 44.85.75. 44.85.75 is a new all-time high during the pit session or the RTH session in the S&P, but there was a ton that traded over at 44.80. Not only as part of the collision, which went from when the Trader Bite was here, the offer there was for 1,100 offered with about 900 as a block. It actually traded an incredible amount. As we came up there, it just had a huge fight up there, and we ended up with a point of control of 44.80, big strike level there. And so that's where that is. We did make a lower high on the, let's take a look. Here's what actually happened. So scenario one, pretty straightforward. Yesterday was a gap and go trade. Gap and go trade. As I had observed or noted in the Convergent Trading chat room right at the open, I said, hey, there's some driving behavior here on a gap. You want to lay off the shorts. Shorts are not permissible under those circumstances. And so we want to take the shorts, keep the shorts aside and look for longs to lean against. The first lean was right here. This was your first lean. This top here was 61. Pull back to 61 with support of the VWAP in the mid below. Look for the zipper. Look for the breakout. That breakout price was 64. 64 was targeting 70 as the next area up. 44.70 for 6 points against 2 points of risk. Again, I narrated all of this in the Head Trader channel on Convergent Trading. And the idea is to watch your rotations, to watch how it breaches the VWAPs and stuff, and then just to hang on for that 80 figure, and it did fill 44.79.50 and traded around the 80 for a while, forming that point of control that you see in front of you. You can see there's a big ledge. See this ledge right here at the 80? It kind of goes up, and then you have the point of control, and it does this, and then it continues. There's a ledge right here, and it just that ledge really showed quite a bit of volume trading up there. So, by the way, the attempt at the high while the NASDAQ was making new highs showed some weakness here as it consolidated, put in a 44.84.50 high versus the 85.75 and started to falter into the closing range. And so this created a situation where we're likely to fall inside of the IB, but what it did is it held the IB high on the close. Remember, just as a reminder, what this is about, the Trader Bite's about, is to maintain a strong stranglehold on the narrative and context. So that's the base. That's your, think of it this way. We're making a pizza, all right? And when you make a pizza, you don't spread tomato sauce on a plate. You spread it on dough. You spread dough out high quality dough. You spread it out. That's your context. That's the narrative. That's the story. That's what the market has done, and that is built on auction market theory. What has the market done? What is it trying to do? How good of a job? What is it likely to do next based on that information? That's the dough. Then the tomato sauce, the next layer is looking at volume profiling, looking at volume at price. An important component of a regular pizza, right? At least an American pizza. You have your tomato sauce, that's the volume. Then we layer on the trimmings, the pieces, and that is, whatever it is, cheese, pepperoni, whatever, pineapple if you're inclined. And that is the price action. That is the price action and whatever else. And at that layer, at the top layer where you put your olives and your pepperonis and your jalapenos and whatever else, that's all just toppings. What people focus on is the toppings. People don't talk about, hey, I'm going to get a pizza and it has to have supreme dough. They talk about, I'm going to get a pizza and I want black olives on it. And that's what gets the most attention. Your moving averages, your indicators, your whatever software, things like that. What they're forgetting is what makes or breaks the pizza is the dough, and that's the purpose of this analogy, not to get you hungry this early in the morning for pizza. Well, morning in the U.S. But this is what I'm talking about. We're focusing the Trader Bites about keeping a really clear grip on what is making the foundation of the day. And the foundation of the day was we opened in a gap. We did not see any responsive selling on the open, and we didn't see any responsive selling on the open, and so you look long, right? This is what the gap and go situation is. You look long, and then you keep an eye on rotations next. On trend days, it is rotations. Yeah, you can get better cheese. Yeah, you can get whatever better topping, but unless you get the dough right, that pizza is awful. It may come out of the oven, taste, cracking like cardboard, like ceramic. So this is what it's about. So whatever you want to layer on, layer on. I'm not telling you to change how you trade, and I'm not advocating for any particular way to trade. It all works, and none of it works depending on how you apply it, because it all boils down to execution. So understanding the narrative, understanding balance and imbalance, understanding price discovery, understanding the condition of the market and the way the market rotates, that is your foundation. That is, in my opinion, what allows you to later on build yourself into trading 100 lots, 200 lots, 300 lots. It's built on a good foundation rather than what comes on top. Capiche? So they're all important, but without a good foundation, you might as well chuck it all in the garbage. Okay? So that's yesterday. Notice the delta moved with price, new all-time highs. Expect sluggishness. Music's a bit loud. That's funny. I have no music on. Did you go to a rave last night? The music's still kicking in your head? I don't have any music on. Anyway, here's where we are this morning. You could see that we opened, we had settlement. We were dead quiet in the, overnight session, and then we took a pop. It took a pop to 44.92 in the overnight session, and that's what's called a tweezer top. You can see, what tweezers look like. They look kind of like this, right? That's what we have here. A bit of a tweezer top, and so a complete rejection. This is the inverse of a V bottom, and the market is now under the point of control In fact, I'm going to change this point of control to be a little louder. The point of control and under VWAP. If it opens down here and it holds that high at 44.85, which is against the 44.85.75 high, then I'm looking for this market to rotate down. It looks like we may be done to the upside temporarily. I'm looking for it to rotate through settlement and to start to test out the areas around the 44.70. That's what I'm looking for here. This is a very, very quiet overnight session, very, very quiet morning. Market's somewhat exhausted and doesn't have much to price in, so it's got nowhere to go. Volume's very light, and overall, we are in a resting pattern. Here's the overall picture yesterday. Remember, I highlighted the fact that we had 2 weeks of 44.38 being the point of control. That is your magnet. That is your main magnet. In the current environment. This is the balance point, the nearest balance point at this point. So any selling that ends up pushing through the gap zone, we have a gap zone from yesterday. We left a gap behind. Any selling will target 44.38. Please remember this number. 44.38 on the map is quite important. So if we're not able to muster up some buying power and continue to 4,500, then we are likely to see ourselves at 44.38 because that's the next logical test point. However, this morning, let's not kid ourselves. We have hardly given back any territory whatsoever, and we're just waiting, sitting sideways, waiting for the next piece of input from the open market. So we've pushed through the balance zone that we left behind in this box right here. This is the last balance, 2250, down to 45.75. We poked it by a tick, and we ran straight up. And ever since we had this day, I've been talking about shorts being in trouble, 38 being a target, and then we gapped up yesterday. So you could see where that's coming from and how it played out. Not that I want to say that I'm right, but what I'm saying is that's the sequence of the market, and that's what's expected. Let's take a look at what's expected for today. Let's turn on our stock zones, master levels, session prices. Here we go. So, again, point of control, mid, and VWAP all coming together in the same spot. The market is in balance, very, very clearly in balance. So, expecting, since we're opening in range, in balance of yesterday and the overnight session, expecting chop. This is a market that's likely to have two-way interest. So, look for a market that is chopping around here. I'm expecting it to make an attempt at the low, potentially push the overnight low, but I'm not looking for a drive down later on, come in, push the overnight high. This is a multi-confluence area that we pushed into in the overnight session. You can see the stock zone right here, and that stock zone held. It's a wide one because we have multiple measured move targets there. Well, I don't know if that's the reason, but it's coinciding. And then if it breaks through, then I expect this to become support for a continuation towards the 4,500. Okay, I'm not expecting this much range today. All indications in the pre-market is we're not likely to get that much range, but I have to go with the trend, and I have to look at the overnight inventory, and I have to see that it's below those key areas in the overnight session, so I expect it to dip down and continue higher. Am I really expecting this thing to have a 25-point range to the upside? Very likely close to close. Sigma right now, let's see, I posted it. Close to close Sigma right now, 23.5 points. 23.5 points. So 25 points is not too far-fetched. Expecting around 23, expecting that to fall, so 22, 21 points tops. But that's the natural process here, to pull back a little bit, gather up some steam, inhale, so it can push the air out to the upside and continue higher. Secondary, open auction, attempts to push, puts in a lower high in between this zone in the 88 and 90. So 90 up here. And then it impulses down. It squeezes some late longs out, consolidates near this low, and then starts to squeeze down and retest some of the areas from yesterday. If it does do so, it is likely to accelerate to the downside. Okay? Last week's settle is at 44.37. The primary point of control is at 44.38. It can move as far as this area right here. 38 is the big magnet down below. But again, I'm going with the range expectations, the historical probability of the ranges. I'm going with that and assuming we're not going to get that much range. I mean, from 90 to 38, that's 60 points. That's quite a bit. So not expecting it to push that far, but if it does, that's the sequence. The sequence is once it gets below the 70, 75 area, it can really push through because there's not much here until you get down into this 55, and then we have support at 50. So I'm expecting that to be the support here before it turns up, really. Okay? Good luck today. I'll catch you tomorrow morning. Hopefully you're minding your risk very carefully, and I'll talk to you soon. Take care.